It's a pleasing pleasure to be here with you guys today, and it's an honor to have such a talent with me today. These individuals, they don't necessarily come from the traditional trading world, but some of them also have experience now going into the new horizons of trading as well, new ways of investments. So I think we'll be covering both of them, but I'm going to keep our focus mainly on the trading strategies with our panelists. So just very briefly, starting with yourselves, keeping in mind about the time, about yourself and how you are involved in the industry.
Hey, hi, hello, everyone. Nice to joining this panel today. I hope we can bring some additional content and input to your knowledge. My name is Oliver von Wolf, originally from Germany. I have a classical banking career behind me, then a lot in real estate, ABC, ABS, CMBS, all this kind of papers. I repped, I dealt, I traded with them. 2019, I made then a switch from a startups in Scandinavia back to more, let's say I was thinking what to do with my life, and I decided let's try blockchain and crypto. So I'm not an OG in blockchain and crypto, but I'm since 2019 there, since with a lot of ICOs. Then we were number 3 in Europe, issuing a full regulated Bitcoin ETF to the German stock market, to Frankfurt. We had white label asset management platforms on Caymans. We were the first one in Maltese with Zika funds for professional investors. We came to Dubai. In Dubai, I built up the DMCC Crypto Center. I onboarded the first 1,200 blockchain crypto companies in Dubai. I was co-founder of Crypto Oasis, and then last year in May, I decided I want to go my own way. So I set up Helion Ventures as an equity fund for early stage companies. Yeah, we most likely invested in Web3, green tech, also healthcare, but everything is somehow linked to, let's say, blockchain and crypto. And it's a pleasure to be here today, and I think I can bring additional input maybe.
Thank you.
Hello, everyone. My name is Artur Azizov. I am CEO and founder of Beach Broker Group of companies. So basically, we run 3 brands. Beach Broker itself, it's a liquidity and technology provider for brokers and corporate and institutional clients. Then B2B Pay, it's a cryptocurrency payment processing company that serve merchants and enterprise clients. And B2 Prime, it's a prime of prime regulated liquidity provider based out of Europe in Cyprus and Mauritius. And we have booths over there. And I'm glad to meet all of you and to discuss all the topics and to answer any of your questions. Thank you very much.
Thank you so much. Hello, my name is Abdallah Harfouch, and I don't have a booth out there, but we have I've been trading for the last 18 years in the financial market, and we have a community of traders where we go every day live on a live stream on the US Open, 5:30 p.m. Dubai time. Now we are almost in the live 740 people every single day. We trade live. I do the trade and people copy paste the trade that I do. We're having amazing result up to 90%. And also we have a swing system. So we work on the psychology of trading and people to understand how this business is more as a business, not gambling, not just like I'm gonna try my luck, I'm going to the casino. No, it's somewhere where you can make money, but you have to treat it as a business, as a real business with all the skills that we needed until we reach the goal to make profits.
Thank you. So I'm gonna go back to the audience. Raise your hands if you are still profitable while you were trading for this year. If you are still profitable. Okay, and the rest of them, if you are sort of a break even. The next question. Break even. Okay,
Don't
still
be ashamed.
Good. Okay, and the third group is very, very important as well, because I think in trading, you learn your lessons from your mistakes, right? So Oliver, starting with yourself, you told me earlier that your background was in a traditional finance, right? So how did you come with the strategy with the individuals over here? We have three different groups: winners, break-evens, and losers. And I'm sure you, throughout your career, you haven't had like every single year you were popping up like 10% or 20%, whatever it is. The down years, what was the psychology? How were you trading your book in those particular days? Or what was the best way forward to come back from losses?
First of all, we have to differentiate if you are a private trader or you are an institutional trader.
Yeah.
So a private trader has most likely less leverage because the capital which he is included is less big. It's the opposite side of institutional traders. But institutional traders, we cannot take all the risks. So it's always kind of following the portfolio strategy on which you are. So a lot of people say, you know, I did with my portfolio 1000x or whatever. And I said, okay, how much you invested? $100. Okay. Congratulations, you did a good job. I cannot scale this kind of trading for an institutional investor. So the question is more or less is, okay, you trade by yourself as a private person, or you want to invest in a trading like a program or trading company. There are two different angles on this. So what you do personally with your money, I don't care. It's not my responsibility. Thanks God. Yeah, we're still free people. But on the institutional side, we have compliance and we have to follow specific rules. In my opinion, also there are like ethic rules which we should following. So what unfortunately not every trader is doing. But I don't think this is the question. For me, the question is, okay, you spoke about mistakes. Yeah, and most people, they're doing always the same mistakes, and then they're asking themselves, damn, I mean, why I'm not successful like my neighbor? Yeah, he has already the next Lamborghini, and I'm still driving, I don't know, Toyota or whatever. So I think the question is how we can, for example, include AI technology in different trading platforms to minimize the risks, but still keeping the human brain of to leverage the profit. So pure by mathematics, chances always bigger than risks. Yeah, that's the reason why a lot of portfolio companies, they just diversify their portfolios and they think, okay, if I go in 100 trades, one will be successful. As an entrepreneur, I think the completely different way. Why? Because for me, it's like going in a casino, putting everything on one number, and this is in what I believe, and this is also how I would trade. So I think that's a main difference between private trading and institutional trading.
Okay.
It doesn't exactly answer your question,
No,
but I think it gives
kind
maybe a
of,
bit more input to the audience here.
You've left some hints in there, and then especially with the buzzword AI, right? But how much actual work is out there? What software is to there, and then how people are just AI, they're doing AI washing, shall we say, right?
Yeah.
But let's come back. I wanted to, Arthur, I'm going to come back to you in the B2B business, okay? But before that, I'm going to go to Abdullah, who is more about the retail trading. So be prepared about the B2B from perspective. So Abdullah, from your perspective, right? So you are dealing with the traders on a daily basis. So the same question over to you.
Look, let's be honest. 90%, a big percentage of people lose when it comes to trading. Why they lose? There are two things that make any person in this room. To be honest, guys, let's be honest with me, okay? Who is losing in this business? Please raise your hand. Okay. If you lose, there are two ways to lose. First, even you over risk or you over trade. There are if somebody comes to me and tell me, Abdullah, I lost my account. I tell him, you didn't put your stop loss. You didn't do the risk management, or you increased a lot size, big lot size for small accounts. What I'm looking here for people, the psychology they must think about is they must think about their loss before you think about your win. as any business, am I gonna go into this trade affording the loss that I put in my technical analysis? Personally, I'm a technical analyst. I'm not into news a lot. So I have a system that I created on the technical analysis only. And the more simple it is, the more profitable it is. For me, once I see a system that is complicated, or they call it advanced, I start to run away. I look for simple strategy, 4 rules, support, resistance, taking trades. And that's what makes it easy for everyone now to trade. So if someone is facing problems, or when it comes to the psychology, the first thing they must know, I'm going into this business as a business, not a hobby. I'm not going to the casino. I'm not gonna try my luck. I always listen, let's try my luck for 1 month, 2 months with one account. No, it's not a luck thing. It's a skill that you need to have in order to grow your account step by step in a normal ROI. Because some people talk to me about unrealistic return, like, I want to triple my account in 1 month. Man, you cannot. If you can, go. I will give you my money and I will retire.
I wouldn't give my money because I know that the risk is going to be huge and it's going to blow out my account in the second one.
True.
So, Arthur, thank you so much. Arthur, now what he has touched on, a lot of that it falls back to liquidity aspect of him, right? The spreads become widened. How many victims are over here of spreads becoming widened and then they get stopped, margin calls and everything from the brokerage? Okay, not many people. But from your perspective, can you please explain me the dilemma? Oh, broker has taken a wrong position against me, or where the liquidity stands. Because honestly, around the news events which Abdullah mentioned, the spreads go mental.
Okay, thank you, Naeem, for such question. A bit tricky question. Okay, actually, since we are liquidity provider and we provide that liquidity that end users trade. And obviously, we run pure agency model business because, with such volume, when you deal with institutional clients, it's not that volume that you might want to take risk on. Because the volume is huge and the brokers and especially dealers who work there, of course, they send to liquidity providers very sophisticated flow. And of course, they try to manage the flow the way when they handle the soft flow and they send to liquidity provider sharp flow. And there is some I think misunderstanding little bit between traders and brokers in terms of the term. Everybody knows this term. It's called slippage, right? But in reality, and what is happening when the brokers, when they send the like big flow and they use a very big clip sizes, of course, they make a market impact. And they consume liquidity from the order book. That's why there is a term, slippage, because you wipe the book and your order gets impacted by this book. And the thing is that one of the strange opinion that I know there is between the traders, that when you have a slippage, it means that your broker is doing kind of B-book against traders. But when you don't have a slippage, that your broker is very cool and they try to give you the best possible execution speed, which is exactly vice versa situation. When your broker is giving you slippage, it's not really slippage, it's a market impact. And that means that broker is sending your trade to liquidity provider. And because this liquidity provider having a lot of such trades combining all together. That's why the broker making this hedge, basically eventually making this market impact. And that's why trader received this kind of slippage, which is basically just difference between the price what you see on the terminal and the execution price that you get your order was executed. So that's one of the key things, and you have to always take into account your order size. And that's why even though some traders, they try to send very small clip sizes, but they send 1,000 trades, still you make this impact. So that's why brokers, when they try to hedge such kind of flow, they have a sophisticated systems, but still those systems cannot really help them. Even though that many liquidity hubs and trading, the dealers, they try to implement into their day-to-day the trading operations, they try to implement kind of co-pilot dealer system that helps them to facilitate the hedging part. But still, those systems, they are not really efficient. It's not a human. You still need a very clever human behind those systems to run those systems very smooth and efficient way.
Okay,
Thank you.
Thank you, Arthur. Now, you've touched on AI, yeah, earlier in your conversation. And I said there's a lot of AI washing right now as well. You are an entrepreneur by nature, correct? So have you come across a credible AI system which can help implement an appropriate risk management policies?
First of all, maybe 2 comments here. I don't think the classical liquidity providers are a kind of business model for the future. And the reason why is because we're coming from a 2-dimensional brokerage or trading to 3-dimension. So and that's the reason why everything, let's say in 40 years forward, everything will be most likely traded by AI. And let's hope still people are smart enough to control the AI at this point. So what I want to say with this, Dubai has a topic all the time, jumping a bit behind the topics, yeah? Since I'm here, we had crypto, or blockchain, crypto, then we had NFTs, then we had metaverse, so it's just like making every year the round, yeah? And now it's AI. Not everything, and we have a lot of startups, they might be good in a traditional way, but they just put somehow AI and they think this is AI now. So world doesn't work like this. So we are very much focused in looking for technologies which we can implement in existing industries. What does this mean? I agree the VC, or like the classical VC model is broken as well as the banking model is broken. Yeah, it's just a question of time until we will see the consequences, and we already see the consequences on many markets on this. So saying this, but banks still will exist in the future. And this or in that way, we don't know if maybe I have my own banking avatar who's doing my banking stuff for me. Instead, a relationship manager. We will have maybe AMC KYSL. What is the hassle in Dubai? Just with a QR code, all these technologies are already existing. So how can AI help in a trading perspective? It can, if it's getting 3-dimensional, going away from 2-dimensionals, it's not able for human people anymore to focus on each of the traits. And this is where I think AI can help, because with AI, I can implement, let's say, a kind of my thinking or risk algorithm in a trading system. Yeah, so, and I think this is, for example, something where I can help. For example, we built now over the last 2.5 years, we built, its original was a DeFi platform. Then I bought the company. So now it's a software solution for institutional investors bringing their regulated product on-chain. This is the future. Yeah, so on top of this, we develop an AI software to hedge our portfolios. So Luna crash, FTX crash came with our Bitcoins, Ethereums. Continuously, we have done over a year 20 to 30%. AI can help here a lot. If you are smart, how to know how to use it, to leverage, and you have to understand the business model. Most of the people, they say, I'm a trader, but what they're doing, they're running behind, let's say, the charts. Yeah, I know I have done a lot of these studies about this. So Markowitz up and down, Elliott waves up and down, all these kind of things. But at the end of the day, is the reaction on a specific or a kind of reaction of an action what's happened on the market. So, and this gets more and more complicated because it's not just in the morning somewhere it's raining and there's no corns anymore or something like this. The world gets much more complicated, gets much more levels also in tradings. And especially also here for the region, it also depends if the trading product is halal or not.
Right. Okay, so I'm glad that you haven't given me the name of a company which is great for AI risk management currently, because I do concur with you, I agree with you that I think AI will improve liquidity aspect of things, because it will improve that for sure. And it will also improve the risk management as well, because something what Abdullah said, over trading. Because when you have a day which is a losing day, what do you end up doing is you lose your discipline, right? So if there is an AI trading mechanism which will tell you from the perspective of statistics, regression, whatever, the back test, we will touch that in a bit. But I just want you to explain a little bit more about overtrading element. When you are in a losing day, how do you convince traders, close your trading for today?
Look, I've been 18 years in this industry. First 6 years, I've been losing a lot.
Yeah.
Because of this. Okay, I will not tell you the amount. Some people will be shocked, but I've been losing. Why? Because simply I couldn't stop my finger from clicking on the buy and the sell. I discovered something very important in psychology, where as a trader, the first time I trade, it's rational. Now I win. If I win, I'm excited. I want to win more. This is a human being. If I lose, I'm sad. I want to make it up again. So I go to the second trade. The second trade is always, you have like emotions involved in this trade. Whether you are winning the first trade or losing the first trade, you will react based on it. That's why I do not trade more than 1 to 2 trades per day, all the day, with a risk management where I cannot lose more than 1% per day from capital. If I lose 1% from my capital, I directly close the laptop and I move. The second day, I come in a new mindset where I'm not here to revenge the last day. I'm here to get the best setup again based on the strategy I do in order to take this trade and make it a winning trade. If it is a winning trade, it will compensate the last day, but I don't come into the mindset that now I'm coming to compensate yesterday loss. Because I will take a trade based on the emotions, because my emotion, I'm still sad from my loss. So what I do, if I win 1 to 2 trades, I stop, I make my 1% per day, minimum. If I lose up to 1%, yani 0.5% in every trade, I stop. And let's be honest, let's do the math. Numbers don't lie. If I have 20 trading days for 4 weeks, 20 trading days, in these 20 days, if my success rate, and it's very important to have a high success rate strategy, if my success rate is 80%, like having 10 trades, I win 8 trades and I lose 2 trades. Most of the traders, they win 8 trades and they lose the profit in one trade. They don't stop it. So what I do, if I'm making a minimum of 1% per day as a profit and the maximum 1% as loss, and I close. In 20 days with 80% success rate, this is our success rate, 80 to 90%, and you will see it later on. I will tell you how. So it's live. We do it live in front of everybody, like not just signals. So once we do it, I know now out of 20 trades, if I take only one trade per day, out of 20 trades per month, now I'm making 16 profitable trade and 4 losing trade. With a minimum of 1% profit every day, it's minimum 16%, and losing 4 trades, maximum 1%, now I'm losing 4% in a month. So 16 minus 4, that's how we are making 10 to 12% per month, just by scalping one trade per day, 15 minutes a day. I don't trade more than 30 minutes a day. More than this, I will go emotional. I will start, me personally, Abdullah, I will become emotional, I will lose. So this is the way I trade. 15 days, 15 minutes, 20 minutes, 30 minutes a day on the US market open. I make the profit and I'm out.
Okay. I'm going to go back to the audience. Please be honest over here and then tell me how many of you guys had those 1% rule implemented in your portfolio and then you closed your trades.
I think you won't.
Okay, so few hands. Now, you had a first day at a 1% loss. You had a second day in 1% loss, and it continues, right? How many of you have actually done it for a 1 month and not changed anything? This is what the trick is.
This is why we cannot.
I can't remember whether you are profitable for the year or whether you are break even for the year. Yeah. So I think this is where I'm going to go back to Arthur, to you. How do we know what he's talked about is important in terms of statistics, right? For me, I think risk management is more important than the win ratio. You could have a very low win ratio. If your risk management is great, you could still come up as positive. In your opinion, what do you think is more important in order to overcome the burden of a 1 day 1% loss, the second day 1% loss, the third day 1% loss? It begins to hit you, whether your trading strategy is right or not. That's about discipline. What do you have to say about that?
Thank you, Naeem. It's a very good question. And first of all, please allow me to reply to that question from a trader's perspective.
Yeah.
Because I used to be a trader, and that's why I totally support what just Abdullah said, because it's a very, very true. So basically, guys, in 2007, when I did my first trade ever, so basically, I don't remember who was the teacher, but what he said, 3 basic rules. And to be honest, after 15 years, nothing has been changed. So those 3 rules are still remain very, very true. So first of all, define your time frame, because you either have to be 5 minutes or 1 hour chart or daily chart. I don't know, but if you are if it's not a long-term trading, of course, it has to be either 1 hour or 5 minutes time frame. So this is the step number 1. The step number 2 is select your right instrument. For instance, if you feel Euro USD, that's your instrument. If you don't feel, like, don't try to go and trade some options or futures, like some kind of sophisticated instruments. First of all, try something simple like CUD Euro Dollar. It's enough. Believe me, you don't need like 100 trades in order to be successful traders. You need just one instrument that you can feel. That's it. So this is the rule number 2. And the rule number 3, that's exactly what Abdullah said. Just think about that way. If your stop loss is, let's say, 5 points, and take profit is 10 points, even you lose 60% of the trades, the rest 40% of the trades multiply like 4 trades multiply by 4 points, it's a 40. And 6 trades multiply by 5, it's 30. Even you will lose 60% of the trades, the 40% with the right ratio, stop loss to take profit, will give you 10 points positive result. These 3 basic rules still remain, after 15 years, remain valid. So that's why, that's my answer, Naeem. So this is, you see, it's a very basic, but because they are very simple, that's why they are so difficult to follow those rules.
Can I add something before I forget?
Yeah.
He was saying something very important, Archer. One instrument. Some people ask me why you only trade the US 30 every single day from 3 years till now. Because I tell them now, after 3 years, I memorized the move on the US Open, how it does. So yes, it's very important. Some people ask me, are you moving the US 30? I tell them, no. It's just like Netflix, like you watch it every single day, the same timing, the same way. And now you create this this understanding, this bond with this pair. That's why I don't trade NASDAQ, I don't trade US 100, I don't trade other things, but I'm now professional in the US 30 and it's giving me money. Some people tell me, oh, there's a lot of I told them, I'm not here to make a collection. I'm here to make money. If I want to make money, this is what's bringing me money.
Sure.
Obviously, sorry, just one word. Obviously, of course, if you are a long-term trader and you are making portfolio, that's where you may diversify your portfolio. So you may select something from US stock, something from, I don't know, Dubai market stock, something from Asia stock. That's how you build your portfolio. And you can even go further. You can diversify your portfolio by sectors. Oil sectors, commodities, currencies, I don't know, FX and so on. But it's a long-term investment. Don't mix it up with the trading. It's different.
You know, I'm going to echo what these guys have said.
That's amazing.
I think it doesn't have to be, I first of all, I agree, the importance of trading one instrument because it gives you a lot of knowledge. But at the same time, if you are in the construction industry, if you are in the oil industry, if you are in the pharma industry, whatever sector or industry that you are in, you understand more, pick a stock or a company or a group of companies where you have a better understanding of that. Because that will guarantee you that you have a more knowledge for that. Now, speaking of portfolio, Oliver, you've talked about the ICO world before, right? So could you share the importance of the diversifications over here now?
Yes, I can. Before I would like to add something to this one. We talk about the 60-40, let's say.
Yeah.
Yeah, so exactly this is the point where...
just for the audience, just please explain 60-40. So
yeah, so they said, you know, if you have this one strategy, whatever, and then you go in and out and it's trading, and then you more or less have 60 bad days and 40 good. Yeah, let's put it on this day, or 60% is bad and 40, or 70-30, depending on what you're trading. Yeah, so the 60 or 70 is exactly what you can reduce with AI technology, because most likely these are based on human mistakes. So this is something where I could help in the future to increase the profitability of many traders. So about portfolio theories, like why we created the first, or like we were number 3, making a Bitcoin ETN, a full regulated one, because we want to give the institutional investors the opportunity to have at least with 1 or 2%, something in their portfolio which is like anti-cyclic or is not like function like the normal market is doing this. So we had this in the past in Bitcoin. Bitcoin was more like comparable with gold as a commodity. This has been changed now after FTX crash. If you look to the charts, so it doesn't work anymore really. But principally, if you put in as an institutional investor, if you take in your portfolio, let's say 1, 2, or 3% of a cryptocurrency or something else, it helps to leverage or make your portfolio more resilient against market volatilities. So at this point, I think it makes sense to take it inside from an institutional point of view. From a trading point of view, no. Yeah, and the reason why is because, for example, we will have no Forex trading in the future. If the CNBC is coming, Forex trading is over. Yeah, and that's the reason why the whole market will be going a 3D trading. Yeah, and this means you need AI, coming back to what I said at the beginning. At the moment, we talk only about the current situation. Yeah, liquidity, what is my strategy, how these things go. But strategy in 5 years, 10 years will look completely different as it looks today.
Strategy looks different every other day depending on the news.
Yeah, it is different every other day, but as we also heard, a lot of them, they're taking, if you watch daily Netflix, you can get a kind of algorithm out of it. And this is just not the truth. The truth is every day is different and every market is different and every market is developing in a period different. So it means what works today, what works tomorrow, it doesn't work the day after, because otherwise the dinosaurs would be still alive, yeah? So, and we have this kind of breaks every 13 years in economic, macroeconomic cycles, and this is where we should go in.
So tell me how much of my portfolio, and I'm speaking of a portfolio, should be in cryptos and how many should be in Forex, or just a very rough number. Either should be 20% in cryptos and 80% in Forex and traditional markets. Let's call them traditional markets. Traditional markets will include everything, okay? So just give me a number because I wanted to go to him with he has something to say. What would you do for you?
As an institutional investor, I would have like between 1.5% and 3% of digital currencies in my portfolio. That's
1.5%.
Yeah, that's completely enough. I mean, you have to see, we have already a change.
So 98% is traditional.
Yes, but traditional is also changing. For example, now on the biggest liquidity exchange in Europe, on the Börse Stuttgart, yeah, they wrapping already their debt instruments and whatever. This also like already digital. So how to trade this in the future, yeah? And this is the biggest market. If you go to Europe and you cannot trade like debt instruments, it's difficult.
Yeah, but I don't think this audience is going to trade debt instruments, but it's a great because I think debt is a very, very important part. Abdullah, you have something?
Yes, I want to say something. First, I'm really glad to be in this expo. Really glad to be here with you guys. Seriously, it's a conversation, nice conversation for people who are new. And I believe also in the AI. I have my own AI at the same time who give me sometimes, because I focus manually on the US 30, but I have an AI who give me about euro dollar and things like this. And then I combine it with what I know. It doesn't work alone. It gives me the idea, it scans for me the market, and I do it. And I wanted to say that I know that the time is squeezing and we don't have a lot of time. And that's why when we launched the Alpha Universe project, I knew that people need to see something live. Now, on Saturday, the 30th of this Saturday, for everybody is here, I'm conducting a mastery course and event where I will explain the full strategy with the 4 rules of the strategy, where you can know it. It's only for 50 people. It will be for people, but we'll designate these people if you are really interested to know it, and you are also invited, guys, if you want. So to come and see how we trade live, I will show you everything live. It will be in the equity premises. We partner up with them. So feel free to talk to us and to be part of it.
We'll come to that. We got about 4 minutes on the clock now. And 1 minute to each one of you. Where the markets are heading for the rest of the year, given all the volatility. So we'll start with you, Abdullah. Abdullah, with you.
Me? Oh,
Yeah.
okay. So for me, I'm still waiting the financial crisis, to be honest. I'm following up the market, but I have something that I always say: the trend is your friend.
Yeah.
So now, wherever the trend goes, I'm a scalper. So it's 10 second, 15 second, 20 second. I think that at some point, I'm making money no matter how much the market is moving up or down. But for the long term, I think soon we are heading, soon, I don't know where, but it will give us the signals, we will say it, that we are getting ready for a certain crash
Crash.
in
Wow.
the market.
Okay.
It's still holding. They are still holding it. I don't know if before the US election or after, because if before US election, it will be a disaster for Biden. So, but they
Yeah.
are still holding it with the central banks, increasing the interest rates at some point to beat the inflation. The inflation is skyrocketing now. We have to see also the news, what's going to happen with this war happening in Europe. And it's going to be on Africa. This will impact big
Very
time the
important.
trend.
Very, very important.
So
Rightfully
we'll have
said.
to see. We'll have to follow up the market.
Arthur, for you, please.
Yeah, first of all, you have to define who you are. What person, what type of person you are. Are you a long-term investor or you are a trader? Because this question actually will give you completely different perspective on your move. It's a different approach. It's a different kind of strategy. So that's why that's the questions that you have to ask yourself first. Second step is if you are a long-term investor, it has to be diversification for sure. And it shouldn't be only capital markets. You have to consider also, I don't know, properties or maybe some investments towards to the business. And then capital markets. Then capital markets have to be divided by, I don't know, equities, CFD instruments, long-term instruments, crypto for sure, because it's also future. So if you are a trader, it's completely different perspective. And I would support Abdullah, but I don't consider the total crash, but I personally see downside because it's going to be next year, the new wave. And it's going to be very strong wave. Every single market, starting from FX, ending, I don't know, crypto. But this is just my personal opinion. And I see more kind of downside because before new wave, it has to be kind of touch the bottom.
Okay, so downside with you.
Unfortunately, I don't have a glass ball to watch in as the other guys, but I would consider traders live on volatility in the market. And it doesn't matter if it's going up or down, macroeconomic factors, principally we live from volatility, and the volatility will be in the market with good or bad news.
Okay, so basically the key takeaway from these guys, the takeaways for they've discussed, and I just wanted to summarize in the last minute is, they've discussed that focus on one instrument. Master one instrument. That is the most important thing. What we've discussed is that there is a difference between trading and investment. And that encompasses everything in whether what he said and Abdullah said and Arthur, that what is your time horizon? It really depends on that particular factor. Something that also was discussed was that, okay, invest in real estate. Honestly, 2 years ago, I was about to buy an apartment in Dubai, where the market was already crashed, and everyone was saying, do not buy it because it's going to go even more worse. But because of the political stability this region has presented, the markets have gone back up. So now looking back at it, that was a mistake. But overall, I think it has been a plum pleasure once again to have all three of you on the panel share your wisdom over here, because in trading, it does become, I have worked as a hedge fund trader for Bank of New York Mellon. I understand the psychology of trading, importance of risk management. And what these gentlemen have shared is master your skill have discipline, have portfolio diversification, and that is the way to success. It is not about someone selling you bot or someone selling you a black box, because you will not know what is in there. But from a fundamentals perspective, we will have another panel tomorrow and we will welcome you. Please give them a round of a huge applause to all these.
Thank you so much.
Thank you very much.
Thank you so much.